Okay, quick question. When was the last time you checked the price of gold? Yesterday? Last year? Never? Because if you blinked, gold just blasted past $5,000 an ounce. In 1971, gold was $35. In 2024, people said $2,500 was the top. And now, 2026, boom, $5,000 an ounce. And here's the weird part. The world's biggest banks aren't panicking. They're smiling and quietly saying, yeah, this might just be the beginning. Now listen, this isn't just a story about shiny metal. This is a story about money, about trust, and about what happens when the world starts quietly asking, is our money still real? Because gold doesn't explode like this for no reason. Gold only does this when something else is breaking. Historically, gold moves when currencies weaken, debt explodes, or governments start hitting the money printer like it owes them money, and, spoiler alert, all three are happening at the same time. So if you're thinking, cool, gold is up, but why should I care? Trust me, by the end of this video, you'll realize this isn't about getting rich, this is about not getting quietly wrecked. To understand today's $5,000 gold, we need to go back to 1971. That's when the US did something wild. They said, hey, dollars are no longer backed by gold, meaning, before that, dollars, actual gold. After that, dollars, trust us, bro. At first, nothing exploded. People didn't riot, markets didn't crash, but slowly, quietly, the system changed. Debt became easier, money became cheaper, and governments realized they could create currency without limits. And gold just sat there, watching, like, okay, I'll wait. And now, 5 decades later, gold isn't reacting. It's remembering what it's worth. Everything was kinda normal until 2020, and then global shutdown, panic everywhere, markets crashing. So governments did what they always do in a crisis. They printed and printed and printed some more. Trillions of new dollars appeared, almost overnight. Now here's the part most people miss. Printing money doesn't make you richer. It just makes each dollar worth less. Gold noticed. Because gold doesn't care about stimulus packages, speeches, or vibes. Gold only cares about one thing: how much paper money exists compared to me. And after 2020, the answer was way too much paper. Here's the uncomfortable truth. The world is drowning in debt. Countries, corporations, households, everyone owes everyone, and nobody really knows how it gets paid back. Governments roll old debt into new debt, like using one credit card to pay another. And here's the scary part. If debt gets too big, there are only 3 ways out. Raise taxes, people hate that. Cut spending, politicians hate that. Or inflate the debt away. Guess which one happens most? Yep. Inflation. And inflation is rocket fuel for gold. Because gold doesn't default, gold doesn't miss payments, gold doesn't care about interest rates, gold just sits there while debt melts everything else. Now here's where it gets spicy. For years, big banks said gold is outdated. Gold doesn't yield anything. Bitcoin is the future. And then suddenly, they started buying gold like crazy. Central banks, sovereign funds, institutions with insider-level data. Why? Because when banks lose confidence in currencies, bonds, or governments behaving responsibly, they don't tweet about it. They hedge, quietly, aggressively, with gold. And when the smartest players in the room start hoarding gold, that's not hype, that's a warning. You've probably heard this. Inflation is under control now. Prices are stabilizing. The worst is over. And yeah, on paper, maybe. But here's the trick. Inflation doesn't have to be high to hurt you. It just has to be higher than your income. Even at lower inflation, your money is still quietly losing value every year. Gold reacts not to headlines, but to long-term loss of purchasing power. So while the news celebrates small wins, gold is looking at the bigger picture and saying, cool story, I'm still going up. Traditionally, higher interest rates are bad for gold because gold doesn't pay interest. So when rates go up, gold is supposed to go down. Except that didn't happen. Gold went up anyway. Why? Because real rates matter more than headline rates. If interest rates are 5% but inflation is also eating 4 to 5%, your returns are basically fake. Gold saw that game early. It realized even high rates can't fix this mess. So instead of falling, gold broke the rule book. And when assets start ignoring the rules, that usually means the system itself is stressed. Here's the real driver behind $5,000 gold. Confidence, not panic, not fear, just doubt. Doubt in governments managing debt, central banks controlling inflation, currencies holding value long term, and once confidence cracks, it doesn't shatter loudly, it leaks. Slowly, quietly, money starts flowing, not into stocks, not into bonds, but into things that don't need promises. Gold doesn't promise growth, it promises survival. And in 2026, that promise suddenly looks very attractive. Here's the uncomfortable thought. If gold at $5,000 feels shocking, that usually means it arrived earlier than expected, not later. Historically, gold doesn't top out quietly. It doesn't politely knock and say, "Hey guys, I think I'm done now." It overshoots. And $5,000 doesn't look like an overshoot. Why? Because adjusted for inflation and money supply, gold today isn't even as extreme as past peaks, meaning in real terms, gold might just be catching up. Let's talk about what could push gold beyond $5,000. Scenario 1. Persistent inflation. Not runaway inflation, just stubborn, annoying inflation that never fully dies. That slowly bleeds savings and keeps gold attractive. Scenario 2. Debt stress. If a major government struggles to service debt, gold doesn't wait for confirmation. It front-runs the chaos. Scenario 3. Currency shifts. If countries reduce reliance on the US dollar for trade, gold benefits quietly. Again, none of these require collapse, just continued pressure. And that's the part people underestimate. If this were a bubble, banks would be loud. Instead, they're calm, measured, almost boring, because gold rising isn't good news for them. It signals weaker currency trust, long-term instability, and limited policy options. They're not celebrating, they're positioning. And when banks position quietly, retail investors usually show up late. When gold hits $5,000, it's not saying gold is amazing. It's saying your money is weaker than you think. Gold didn't suddenly become more useful. You can't eat it. You can't stream Netflix with it. What changed is purchasing power. Your cash buys less. Your savings shrink quietly. And gold is just the mirror showing that reality. That's why gold feels expensive, because money feels cheap. Let's be clear. This is not sell everything. Buy gold or else. Civilization ends Tuesday. Big gold moves usually happen during transitions, not apocalypses. The goal isn't fear. The goal is awareness. Understanding why gold rises helps you understand the system you're living in. And once you see it, you stop being surprised by the headlines. So the real question isn't, will gold go to $6,000? It's, what do I trust to hold value over the next 10 years? Because gold isn't competing with stocks or crypto or real estate. It's competing with broken promises. And right now, a lot of promises are looking shaky. Most people will say, gold is in a bubble. This is just hype. I'll wait for a pullback. That's normal, because big financial shifts never feel obvious while they're happening. They only make sense after the fact. In the moment, they feel confusing, uncomfortable, easy to dismiss. Gold's move isn't loud or flashy. It's slow, heavy, and intentional. And that's why people underestimate it. Every time gold has made a major run like this, history usually had one thing in common: a system under stress, but not broken yet. Gold doesn't show up at the end. It shows up before things get messy, before currency resets, before policy changes, before unexpected financial events. Think of gold like the smoke, not the fire. Here's the good news. You don't need to love gold. You don't need to buy gold. You don't need to become that guy. What matters is understanding the signal. Gold rising like this means risk is being repriced, safety is being revalued, and trust is being questioned. Ignoring that signal, that's the real risk. If you remember just one thing from this video, make it this: gold at $5,000 isn't about gold. It's about the system blinking first. Once you see it that way, everything else starts to make sense. So here's my challenge to you. Don't panic. Don't FOMO. Don't ignore it either. Just ask better questions, because when the boring asset starts screaming, it's usually worth listening. If this made you see gold and money differently, hit like, subscribe, and drop a comment. What do you think gold at $5,000 is really telling us? See you in the next one.